Hello, this is Right Side Trader. Today is May 5th, 2025, and this is me going over this SPX trade, my goals and my plans, and how I'm looking at things. This is gonna be the first set, and then I'm gonna do another set. What is gonna be the first video? This is like the second video. I'm going to do a third video where I actually get on the platform and get into a lot of the details on there. Right here, this is going to be like the 10,000 feet view of the trade. I'm actually just going to go through some slides and talk through these slides. I'm not going to jump on to the platform, I don't think, and I'll show anything. I'm going to do that all on the second video. So I plan on this going pretty quick and all, and that's pretty much it and all. So that's that. Let's just jump right over to it and get right into it. So first of all, just to sum up again, my goal is to place this trade, daily. It's a SPX 0-day option, 10 wide, 20 delta. I'm going to I'll get into all that a little bit right now, a little bit more of the details of that, and really into the details of that on the next video, what that's all about. But here I'm going to just talk about at the 10,000 feet view what that is. My idea what a 10,000 feet view is, what all that is and all. But I'm looking to be placing this trade every day for the next year. I started in January. I'm looking to make around 25,000 or more a week with this iron condor trade to make $1 million a year. That's one of the goals. That's something I never have done before. Seemed like I had a ceiling. I have a ceiling and all, and I've ran into that ceiling already and stuff. And the thing is to see if I can actually cross that ceiling with this particular trade and this particular strategy and see how I can do. So let's just jump right on into it, and I don't want to go no more into that type of stuff other than that. So let's do that. Boom, boom. Let me jump over to what I do daily, and where's the other stuff? I don't know what happened there, but let's get back going. Boom. What I'm gonna do here, the way I'm gonna do this, I'm gonna approach this from the trade itself, and actually just tell you what I'm kind of like what it is. Again, started off, I'll actually be doing SPX auction. Options. I kind of pointed to what is the SPX, and I thought about digging into options and all that kind of stuff and explaining options. But what I'm gonna do, I'm gonna put a link in the description of a place that really explains options real good. I'm gonna kind of like focus on this trade here, and that I'm actually using options in what I'm doing with these options, and kind of explain that. Explaining options and all their little ins and outs. I'm going to point you to some good education out there that is free and all that you can follow and all. Have any questions, you can post them here, post them there with them. They're actually very good people and all, and I think you really enjoy going through what they have out there to talk about. I'll put a link in the description. But first of all, let's jump on into this. Iron Condor. Iron Condor is selling a call spread and selling a put spread, also known as selling a vertical on the call side or vertical on the put side and all. And the thing, well, doing a spread trade. And an iron condor, the trade that I'm doing, I'm selling an iron condor, so I'll be selling a call spread and I'll be selling a put spread. I know right now this is a lot different than okay, you coming up with you telling me things that I don't even know what they are. That's the whole thing. Sometimes what you end up doing what I usually end up doing. I end up doing what people have been saying, but then I don't really understand what it's doing. So, but I want to kind of like start up at the high end and come down to the details later. And like I said, in the next video, I will actually get and show you the details. All right. So on an iron condor, you're selling options and you're buying options. And to create a spread, you have to sell an option and to buy an option. That's what creates the spread. That's also what makes this trade where the risk is defined, and we will come back to that a little bit later and all. So that's the whole thing when it comes to a spread trade and why people do spread trades. It defines the risk and all. Now, but an iron condor is made up of call options and put options. Some people call this as a neutral trade, where again you're not calling direction in the market. All you're doing is looking for the trade that you actually place to stay. In this case, since we are selling, an iron condor, we're looking for the market to stay within a certain range. Okay, and this SPX iron condor, and the risk with these options is that it's a cash. It's normally with options they represent 100 shares of the underlying, whatever you may be selling it on. And in this case, with the SPX options, they're cash settled, meaning whatever you buy or sell, you're receiving cash. If it goes bad against you, you're going to end up paying cash out of your account to settle this trade and all. And just we have to remember with options, it's still with this one, it's 100 times, the amount that you actually pay, or the credit that you actually get based on that option price is going to be 100 times whatever that price may be. And since we're going to be dealing with daily expiration, you're going to be getting these settlements every day. But in our case, we're looking to close these trades, before end of day. So we shouldn't have to worry about expiration, settlements, and all that kind of stuff. The other thing when it comes to the risk on this trade is that the minimum strike width on these options that we're going to be dealing with is $5 wide, meaning there's a $5 difference between the strikes and all. And the strikes, we will look at that on the next video, and I'll show you exactly what I'm talking about when I say strikes. Strikes are the different price levels that you can buy and sell at based on wherever it's still throughout the whole range of number based on where the underlying, the SPX is actually trading at. You have numbers below where it's trading at, and you have numbers above where it's trading at. And those numbers are going to be in $5 increments. On to the next slide. Now, an SPX iron condor, we have to sell and since we're selling this iron condor, there's going to be a call side that we sell. And normally when you're buying or selling calls, and since we're doing a spread trade, we're going to be buying a call and we're going to be selling a call. Normally if you're just buying a call option, you're looking to buy that call and you're looking for the price of the underlying to go up in order for you to make money. Normally if you're just selling a call, if your broker allows you to sell a call, you're looking for price to go down. And you get to keep the money, the credit that you actually receive on that trade, and as long as the market closed below the strike that you actually sold. That's more towards what we are doing with this iron condor, because now we're going to be putting this buy and sell together to limit the risk that we have, because normally if you buy an option, the risk is that you have is the money that you spend. When you sell an option, especially a call option, the risk is unlimited, they say. Although nothing is going to the moon. I haven't seen anything going to the moon. But you can see things go 400, 500, 600 points against you, then times 100, so things can get pretty crazy. But to limit that risk, we end up doing what is called a spread. Back to that spread again, and we're going to be selling a call spread on one side of this with this iron condor. So again, the spread that we're going to be selling and the width, based on the width of the strikes that we sell, that's going to limit the risk that we have on the trade. So again, when we're selling a call spread, we look to sell this and get a high credit, and we're going to want to buy it back at a lower credit, at a lower debit is what it is called. Now, the other part of the iron condor is on the put side. On the put side, normally when you buy a put, you're looking for price to go down. As price goes down, your put option actually goes up in price again, and that's how you make your money. On the put side, normally when you sell a put, you're looking for price to go up. Because when you sell a put, you collect the credit. That's the most that you can make on that trade. And as long as the market or whatever product that you sell that put on stays above the strike that you actually sold, you are able to keep that money that you made on that put. Or if you close it for anything less than the credit that you received, that's the money that you actually make. But now selling a put spread, again, we look to get some type of credit. and all. We want to sell this thing and receive a high credit, and we want to buy it back at a lower credit, at a lower debit than what we sold it for, and that's the money now that we make on this trade. So now we need to kind of understand where are we actually selling these things at, and what strikes, what deltas, and that's when it comes into that whole delta thing that you hear me talking about. And I think that's the most important for me. The strikes and the delta kind of identifies the strikes that you're going to actually be selling at, and that's what you're looking at first. You're looking at that strike, at that delta that you're going to be selling at, and then plus or minus a few tenths of few tenths, I'll say, you might move it around again to get near where there's more volume or more open interest, and all. We'll look at that on the platform, but ideally we're starting off at a 20 delta or a 0.2 delta, and the ideal for this is this delta is going to decrease on us throughout the day. The other thing that you may look at on this trade is Vega or the VIX. If the VIX is high, it's something most of the time is a good thing, as long as it's not going higher. But you're looking for the VIX to decrease on this trade, for today on this 0-day option that you're actually doing. The other thing is theta. Theta may be a little bit high based on how they're doing this, but it should be already low, but you're expecting it to go actually time to pass and this thing to actually go lower. Now, the whole price that delta is going to identify for us is we're going to be looking for it to stay within the strikes that we actually sold. Now, putting it all together, we're going to be selling a call spread at a 20 delta and at two strikes wide, so 10 wide and all. We're going to be selling a put spread at that 20 delta also on the put side, and it's going to be also 10 wide. We're going to be looking to receive some type of credit for that, whatever the market is giving us at that time and all. And my way I'm doing this trade based on the data that was out there that I kind of liked and I'm testing out at this time, is just to close whatever credit I receive. I'm looking to close it to collect 25% of that credit. Or I'm looking to close this trade sometime before 11 a.m. Eastern time, because anything can happen. The market can get where it's trending down on you or it's trending up on you, and you may have to close this trade early. I'll get a little bit more on that in the next video about how I go about watching how I'm going to stop myself out of this trade, or if I'm going to end up taking a little bit less than 25% on this trade. Now, selling this iron condor, our expectation is for time to pass, theta decay on this trade. We're looking also for Vega. If the VIX is high, we're looking for VIX maybe to drop on this trade and all. The other thing that we need on this trade is the price to stay within the strikes that we actually sold. And that's pretty much it when it comes to this trade. That's all we're looking for. So that's all I'm going to get into today on this, kind of give you that 10,000 feet level view of this trade. Also, I'm going to put a link down there into some option education stuff and all, where you can go look and dig more into option education. And then in the next video, I'm actually get on the platform and show you all this little stuff that I'm talking about, and where you can put a whole picture with it and see exactly what is going on. And that's pretty much it. If you have any questions, if you like, give me a thumbs up. Make any comments, and I'll, if I need to add anything extra into the next video, just kind of let me know. But that's going to be pretty much it. I hope this is being helpful, and I can say hope there for some. And see you on the next video. This is Right Side Trader. Talk to you later. Have a good one. Thanks. Subscribe, like, give me that thumbs up. Talk to you later. Bye.